Peter, thank you for your time. So all of us have been fixated on this number that says that these are your worst results in more than a decade. And headlining earnings down 24% is not a number that you would normally associate with Shoprite. Are we getting excited about one set of numbers way too much?
No, for us, it is a convergence of four very extraordinary factors in the last year. In terms of timing, it's not ideal. We wouldn't have done it that way, but and the four factors basically is the completion of our multi-year ERP replatforming. That's a project that's been coming 7 years in the making, 4 years since we started the design, and 17 months of implementation. That unfortunately coincided with the aftermath of the May-June industrial action, then going in live with 50% of our business and straight into Black Friday. That then disrupted our supply chain and our stock availability. The number that we quote there, so we lost in the region of in excess of 1 billion rand in revenue, and equates to over 250 million in profits. And then the third factor is the dramatic, I want to say this year was the year of the currencies for non-RSA, Angola in particular, and we don't want to single them out, but it is what it is that Kwanza devalued by 85% in the last year, and because that country is so dependent on imports, it meant that products had to be doubled in price, which we just couldn't do. So we couldn't, we had to subsidize the price increases because the consumers couldn't afford it. And then in the RSA operations, it's the first time in history that we've had 18 consecutive months of stagnant internal inflation. As a matter of fact, deflation. And I try to look back. I've been around in this company now 21 years, and I can't find a record of having had to go through that. So what I want to tell you in essence is that our results is certainly not a reflection of the fundamental strength of the business currently, and that is proven by our customer numbers.
And in terms of that deflation, Peter, how big a chunk of your overall revenue would that have affected? And then also, in terms of the bad stuff that you have just gone through now explaining to us, is that over and done with?
Yes, the implementation is now finished. I cannot speak to you next time and say, oh, I thought it was going to be over, but it's not over. We're out of that, and I think as I did in this morning's presentation, is that the positive growth that we've seen from the festive season, that trend has continued into January and February, although I don't want to put my neck out for predictions because none of us know exactly what will come in the next couple of months in terms of the elections and maybe power supply, but there's positive and negative. Definitely, which is positive, which we're looking forward to benefit from, is the increased minimum wage from January, and the positive push in terms of inflation after 18 months of deflation.
Hi Peter, it's Byron Lotter here from Vestact. With regards to the repurchase of that deferred share scheme, am I right in assuming that this is Christo Wiese relinquishing a bit of control, and does that mean that maybe he's stepping back a little bit?
If I can quickly just say, we have in the last 2 years have engaged much more closely with our shareholders, and there were 3 items which they have either communicated verbally or in writing with our one-on-one meetings, etc. One is the composition of the board, and you will have noticed that has changed quite a bit in the last 2 years. The second one was the remuneration policy, and we've engaged with them in writing and one-on-one during December, and you will see some communication in that regard before the commencement of the new financial year. And the third one was the possibility of looking at the capital structure in terms of global best practice of one economic share and one vote. So the pure fact that we've engaged in that conversation necessitated a SENS announcement this morning that we have engaged in that. It's still a shareholders' vote. It will remain a shareholders' decision. It's not a management decision. And it's the fact that we've commenced with discussions that we had to put out the cautionary.
Okay, and then in terms of your African operations, I know you guys would often say that when you operate in really tough conditions, the positive there is there's no competition. But as you've seen in Angola, there's often a reason there's no competition because it is really tough. Is there a risk that if you do manage to crack it, and you have had a lot of success so far, that an MTN situation pops up where the countries that you operate in want to target repatriation of funds, or want a bigger piece of your pie that you've put a lot of hard work into building?
I don't think so in none of the countries, in particular Angola, where we are more heavily invested with our own capital than any of the other countries, because we had to develop the shopping centers that we're in ourselves. We have had such a great relationship with the new president in terms of setting new industry and agricultural programs, etc., in his guidance to get the Angola economy less dependent on oil. So I think from all the actions that we have seen over the last 3 or 4 years, it's basically now 3 years since Mr. Lorenzo has taken over from the Santos, that we certainly have no indication of that. And the fact that we do get hard currency, in the last 6 months we got $67 million, and we are getting our money in terms of the dollar-based government bonds. So there is no indication that there is a negative perception towards the Shoprite business, or that we could be facing that kind of action that you refer to. In Nigeria, it's slightly different in that there you've got items completely banned to be sold or to be imported, and then you've got banned for forex, which means that money that you use to purchase stock, you can never repatriate. And that is a very fine balance that we have to manage. And we are waiting the outcome of the elections to make our future decisions on that country.
Yeah, quickly.
Not to disinvest at all. I just want to say that, just in how much capital we will put.
I actually was about to ask you that question because given the uncertainty on those Nigerian elections, I wanted to know what the plan is. Is it to hold, or is it perhaps to try and see one way in which you can try and get out? Because clearly it does look like things are a little bit unstable.
No, if I'm not an economist, but if I listen to the economists, and certainly if you believe that they are right, that by 2100 there will be 4.7 billion people living on the African continent, then certainly we are in it for the long run. We know it's emerging economies and that they will be volatile. 2 years ago, we were all very happy with the very large contribution that we got from Angola and the 300 million in dividends that it assisted to pay. And now, 2 years later, there was a currency peg or free floating that had the devaluation. So we accept the volatility of the continent, but we do believe in the long-term opportunity that the continent presents. And currently, we have the undisputed advantage in terms of footprint with 419 stores and 3.7 million customers a week. I think we have a lot to offer still on the continent.
And just one last quick one, and I know this is a bit of a generic question, but as an analyst, it's always nice to see what's happening on the ground floor. So far this year, are you seeing any positive changes with the South African business?
Absolutely. Two things. We did unpack this earlier, but we have managed through this whole difficult trading not to make short-term decisions. So we have still have been measured as the cheapest national supermarket chain. We've got 80% of the adult population visiting our stores at least once a month. And the positive trend that we've seen from the festive have continued into January and February, and therefore we are still very optimistic, although we don't want to put a prediction out there as none of us know what may unfold through the elections of our own.